just have this feeling that all that's going to play catch up, probably starting to happen right now. Gold 10 years from now will be up 3 or 4 times relative to the S&P 500.
If you're looking for the ingredients of a bull market, we certainly have them in front of us.
Okay, gold. Why is gold having the run that it is having? Do you think this is the beginning of a long-term bull run for gold, or do you think this upswing is temporary? That's from Mario.
Look, let me comment first, and Chris will give you a more educated comment, because this is just a feeling I've got. So ever since the GFC, in fact, you could probably go back before that, with Greenspan, etc. But let's just say from the GFC, it just seems like any little blip, a problem encountered. Guess what? Quantitative easing, 1, 2, 3, 4, whatever. Operation Twist. What am I missing out, Chris? Whatever. And then you've got all these stimulus packages, then it's the whole government spending thing going bloody well. COVID, no problem, folks. Sit at home, sit on your ass, and we'll just pay you to do nothing. Pay you. Like, there's a cost to all that. And I have this feeling that central banks acted with the classic old saying, they acted with like gay abandon. I don't know where that song expression came from, but they could do what they want, anytime, anyhow, any place, do what they want with no long-term consequences. Print as much money, stimulate as much as you want, ease as much as you want. Hey, no problem. Inflation, no problem. And I just have this feeling that all that's going to play catch up, probably starting to happen right now. And so gold 10 years from now will be up 3 or 4 times relative to the S&P 500. And that only gets you back to where it was in 2010. Gold relative to the S&P 500. So it's going to go up a lot. That's just okay, look, folks, it's not a temporary thing we're seeing at the moment. It's going to go up a lot relative to the S&P 500. How much, I don't know. When everyone is talking about gold, got to have gold in your pension funds, retirement portfolios, or a gold miner. It's like we'll be getting out, but it's a long way from that. And let's see what happens to the price of gold relative to the S&P 500, in between. That's my 5 cents worth.
It's a difficult one because, there's been commentators since I can remember talking about these issues, Brad, all the way back then. And so it's difficult, that saying, even a broken clock's right twice a day or whatever, rings true.
The thing is, folks, we just don't know. It's one of those, we're not getting carried away by it. What's our exposure, Chris? 5-10% in our portfolios to gold miners, and so be it. We don't have any more certainty of what's going to happen with that, with, say, uranium or shippers, but everyone gets carried away.
We upped our gold. We own GDX, and then we put in GLD in I believe it was beginning of 22, and so our overall gold and gold equity positioning was basically doubled at that time. But and we've written about this for some time, so I'm not sure, Mario, how long you've been with us, but we were highlighting the fact that gold was moving in almost every currency around the world, but because it's priced in dollars, while the dollar was strong, it was masking a lot of the bull market that was underway already. So you had gold moving in all these other foreign currencies. The other aspect, and we wrote about this maybe 3 issues ago, is that gold ordinarily gold equities ordinarily do track with gold. there is some lag, etc. But by and large, when you look at them over time, they've always mirrored each other to some degree, and that's not been happening this time. And I think this is kind of an important component here, because if you go and break down who's actually been buying gold, largely it's been central banks buying it. Now, this is important because your question was, is this the beginning of a long-term bull run, or is it something else? So in any bull market, what you need is fuel, right? So where is the fuel going to come from? Well, let's look at who the buyers of anything could be. You have sovereign wealth funds and central banks, largely tied to the hip. Then you have your commercial or your commercial interests, at least depending on the commodity. You have your institutional money management, and then you have your retail, Joe Sixpack at the end of the line. Retail is always the last to participate every single time, pretty much 100% of the time. Institutional money comes in after commercial. And what the institutions do, of course, is they package all this shit up and then they give it to the retail and they make it easy. So what you start seeing is ETFs and personally managed this, that, and the other thing around whatever the theme is. So if we're talking about gold, you'll start seeing all sorts of gold, quote unquote, products that will come onto the stream. None of that exists today, none of it. The institutional money is not in this space. The commercials aren't, the commercials are just doing what they've always done. So there's no additional buying from them. This has been solely from central banks. And then you go back and you look at history. When do central banks buy gold? Central banks buy gold ahead of war. Now, does that mean we're going to have a war? I don't know, but there's a probability event ahead of this. What we do know is that there's a couple of, I think, asymmetric opportunities in front of us. One is that there's a huge pool of capital, commercial, institutional, and then retail, which has not yet entered the market. So on a probability basis, we have this fuel sitting in the tank, sitting in the sort of the silos that has not yet entered the system. Now, maybe it doesn't enter the system, but if it doesn't enter the system, does gold go down? Well, it goes down only if the central bank starts selling it. Do they? We don't know. We'll find out. But if you're looking across your tranches of capital which can enter the market, we have a whole lot of tranches of capital which have not yet entered the market. The other component behind this, if you want to get all funky, is the equities. The equities haven't moved at all. I think it was, again, like 3 weeks ago, go have a look at the insider that we wrote, and we highlighted the massive discrepancy between your equities and gold itself. And equities now are profitable. They're the cheapest they've been on a free cash flow basis in over 40 years. Again, does that mean that they become more expensive, i.e. they go up? We don't know, but on probability, that's a bloody good play. And so that's all that investing is looking at probabilities, making a decision, and then weighting that probability in your portfolio. So all these things that I've said might have some of you getting all super excited. You're like, damn, we should be buying gold and we should be buying gold equities. Yes, you should. But the question is, to what percentage, to what amount? And so a good portfolio manager will look at it fairly dispassionately and say, okay, I'm going to put in a percentage that I can sleep at night and I don't have to get all worked up over it. So that's what we've done. But anyway, so I think to answer your question, we have huge pools of capital which have not yet entered the gold market. Equities haven't moved at all, and there's a very good reason equities haven't moved at all, despite them being more and more profitable, the most profitable they've been again in 40 years. And that's because of the buyer. Central banks don't buy Newmont Mining or Barrick. They don't give a shit. They won't hold it on their balance sheet. They never will. The only ones that are going to buy those equities are going to be institutions and retail, and they've not come in yet. So if you're looking for the ingredients of a bull market, we certainly have them in front of us.
Yeah, if you combine also the so-called issues with paper gold versus real gold, and with this, it could be, the reason you hold gold privately, like gold bullion instead of gold stocks, is for this reason too, Mario, so that you don't have to worry about any of this stuff, because if it does take off, then then you're covered.